So a W-8 is a US tax form, and it has two main purposes. The first purpose is to establish your tax status, and typically, depending on which form you fill in, you'll be establishing your tax status as a non-US person or a non-US entity. The second purpose on the W-8 form is to claim the benefit of a double tax treaty with the United States. So typically, the tax rate on US sourced income, like dividends from Tesla shares, would be 30%, unless you have given your financial institution a W-8 on which you have claimed the benefit of a treaty between your country of residence and the United States. So the kind of tax treaties we're talking about here, you can find the tax treaties actually on the IRS website, but the typical tax rate in Europe and the UK is 15%. So it's half the tax that will be taken if you didn't have that W-8 in place. The Philippines is 25%, and China is all the way down at 10%. The forms in a W-8 series are the W-8 Ben, which is for individuals, the W-8 Ben-E, which is completed by corporations and certain kinds of trust, the W-8 ECI for people who have income that's effectively connected with a trade or business in the United States, the W-8 EXP, which is for people who are exempt from withholding tax, the W-8 IMY, which is for financial institutions who are trying to document their tax status to another financial institution. Most investment clients are going to be either individuals, customers of retail brokerages, for example, or they're going to be corporations. And so the W-8 Ben and the W-8 Ben-E are by far the most common W-8 forms that we see in the market today. Trusts are a really complicated area. There's an entire industry around trusts. The thing that the US is trying to identify in trusts and corporations is the difference between something called a passive NFFE and an active NFFE. Passive NFFEs are non-financial foreign entities of which over 50% of their income comes from passive investments. Let me explain it with an example. So if you're a corporation and you make widgets, and you make lots and lots of widgets, and you make lots of money from those widgets, so you've got a bank account with a whole pile of cash in it. And what happens is the treasurer of the corporation says, well, we can't just leave this cash sitting in the bank. Why don't we invest it? So some of that money from making widgets gets put into investments like buying shares, and those shares will have dividends associated with them. Now, those investments are delivering income which is called passive income. So it's not earned income, it's just simply arriving because you bought the shares. So passive NFFEs are corporations outside the United States who are receiving more than 50% of their turnover from passive investment income. An active NFFE, on the other hand, is an organization, a corporation, which is earning less than 50% of its total turnover from investments. In other words, it's making most of its money from making those widgets. And the IRS is more interested in passive NFFEs than it is in active NFFEs. The active NFFEs are just corporations going about their daily business making widgets. A passive NFFE is much more likely, although not certain, it's just more likely that that kind of vehicle would get used for tax evasion. And so the IRS on the W-8 forms has a section on the W-8 Ben-E where it asks, what kind of corporation are you? If you tick the box that says passive NFFE, the next question from that will be, are any of the owners of the company Americans? If they are, there's a section of the W-8 where you have to fill that in with the name and the tax ID number of your owners of the company so that the IRS can make sure that they have declared that foreign asset as part of their portfolio. The double tax treaties that the United States has with everybody else, so every US treaty has this clause in it, which limits the benefits that a foreigner can get under the treaty. Now, in order to avoid that, there are certain conditions that you may meet which allow you to say that the corporation meets the limitation of benefits clause, and the good news means then that the full treaty benefits will apply. One of those, for example, is the base erosion and profit shifting test. The other is that all of the owners or shareholders of the company are also tax resident in the same country as the corporation is resident. And there are a number of different tests, and your job when you're filling in the W-8 BEN-E is to decide which of these tests most closely resembles your company's circumstances. There are two things that really trip people up here. The first one is probably the most important, and that is to remember when you sign the form, you are signing it under penalty of perjury in the US law courts. So it's important to understand that when you fill the form in, everything on it must be true and accurate to the best of your knowledge. Some firms are using online mechanisms, so you're not filling in a physical paper W-8 form, you're merely answering questions at a website. The important thing there is the rules on using websites to gather W-8 information are very specific, and one of the key pieces is the penalty of perjury clause has to be the last thing that you see before you electronically sign a W-8 in an online platform. So it's important to understand that if you don't see that penalty of perjury clause, then what you're signing is not a W-8, it's not even a substitute W-8. The second one, which probably doesn't sound quite so important, but it can have some ramifications, and that is the date on which you sign it. Everybody outside of America uses what I'll call the European date format, but this is an American tax form, and so they've written it so that when you put the date on the end of the form, it should be in the American date format. Now you might say, well, it doesn't really matter. Well, actually, yes, it does. If you're claiming a treaty benefit, the financial institution can only apply the treaty benefit and give you a lower tax rate from the date that you signed the form. And so if they do that and you get upset and you say, hang on a second, you've withheld this tax at 30% on my dividends, they may say, well, it's because that's when you signed the form. And so it's important just to remember, it's a very small point, but the date format on the W-8 forms is American date format. Well, number one, don't panic. It looks like a really complicated form, but equally, they do seem sometimes to be quite invasive questions. But the fact is, the financial institution has no choice. They have to ask you these questions. And unless you want to be taxed at a very high rate on any income you get from the United States, you should fill the form in. And if you can, claim the treaty benefits.